What is a smart trader? A smart trader is someone who knows how the markets really work. They know how they move, why they move, and who and what moves them. Armed with this knowledge and understanding, they can trade in the markets alongside the major players. Smart traders are in the minority. The majority of retail traders and investors do not have this information. They rely on technical analysis and fundamental analysis to predict market movements. The problem for them is that on their own, these tools and methods don't work, which is why the large majority of traders lose to the markets. Remember, the market needs losers, many of them, so that the informed minority can win. Today, we'll show you how you can become a smart trader, trading in harmony with the professionals rather than trading alongside the herd. So why do so many traders lose? They lose because they've not grasped some fundamental facts which drive all markets. Fact number 1. By far the largest players in the market are the hedge funds, investment banks, trading syndicates such as Goldman Sachs, George Soros and Berkshire Hathaway, headed up by Warren Buffett. These are organisations you've probably heard of, but there are many others which aren't publicly known. But together, they're by far the biggest players in the international trading community. At TradeGuider, we call them the smart money. Fact number 2. The smart money have to make money, and they do this by selling at the top of the market and buying at the bottom. Fact number 3. In order to do this, they have to move the market so that the prices rise to the top or fall to the bottom. So, how can they move the markets? Tom Williams, inventor of volume spread analysis, was a syndicate trader in the US and is one of the very few smart money traders to spill the beans on how the markets really work. He explains how the markets are moved.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low, depressed prices. And the best way to do that is to create bad news, put out rumours, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, you know, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions, like we might stand up and say, "Is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products." And of course, it was a complete fabrication. Then the directors would look at each other and sort of shrug their shoulders, but the audience heard that, and they think, aye, they've got something going on, they're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all, because we've bought in the lows. We're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing, if the opportunity's there.
Markets have always been manipulated. Here's just a few examples. Let's begin with the British petroleum oil spill disaster in 2010. On the 25th of June that year, the shares fell to just under $27. The news was grim, and the pundits and reporters were talking in terms of huge losses and a possible breakup of the company. And everyone who had shares was looking to sell, in full expectation that prices were plummeting. And sell they did, straight into the hands of the smart money professionals who bought cheap. Within 6 months, the price of the stock doubled. Buy cheap, sell back when the market rises, and that's how the game is played. On May the 6th, 2010, something very strange happened in the financial markets. This day is now referred to as the flash crash, because no credible explanation has been provided by the regulatory authorities as to exactly what caused the crash or who was responsible. In fact, many investors begin to suspect that all was not what it seemed to be. CNBC's closing bell anchorwoman Maria Bartiromo was reporting on the day the flash crash happened. fellow reporter Matt Nesto was explaining some unusual anomalies in a number of stocks, even though the mainstream media claims that it was caused by a lone trader hitting the wrong button, B for billion instead of M for million. Maria saw through it straight away.
A penny. So those are at least 8 names that they're going to have to track down on top of the Accenture trade, where we have the stock price intraday showing us at least, we'll assume, a bogus trade of 0.
That is ridiculous. I mean, this really sounds like market manipulation to me. This is outrageous.
It happens a lot, Maria. It really does. I mean, we could probably ask the NASDAQ. They may not want to say exactly how often it happens, but it happens frequently, and they go back and they correct. And the thing that stinks is if you, in good faith, put in a trade and made money and then lost it, you lose it.
What we actually witnessed on May the 6th was a giant shakeout of the market. The smart money were expecting higher prices and wanted to catch the retail traders by marking the price down heavily before moving the price up. They were bullish, the stocks were going to rise, and they wanted to buy at the best possible price. Wouldn't you want to do the same? Buy it at the lowest price, knowing you could sell it later for much more than you bought it for. Qantas soars to record half-year profits is the headline on February the 23rd, 2016. Lower oil prices have helped Qantas post a record pre-tax profit, and best first half profit in the Australian Airlines 95-year history are used directly below the headline. All the news is bullish. The stock has been going up and up because it's in an uptrend. To the retail trading and investing community, this appeared to be a great opportunity to buy the stock because everything lined up. And if you didn't go into the market by now, you'd miss the move. Okay, so buy. What happened? The stock plummeted spectacularly, and the uninformed retail traders said bye-bye to their capital. That's the trading game. Buy low, sell high. Be a predator, a clever predator that understands exactly how the prey think and act. Smart traders appreciate this and understand that quite often all is not what it seems. The media, the sentiment and the emotions will often lead to poor trading decisions and big returns for the professionals. The good thing is that whilst the smart money try and disguise their activity, there's one place where they cannot hide: the price chart. And in this presentation, we're going to show you how to read the footprints left by the smart money on any price chart, whether it's a currency pair, a stock, commodity, or a derivative of some sort. At TradeGuider, our mission is to turn our customers into smart traders. To do this, we use a unique, powerful methodology called volume spread analysis. VSA is able to detect smart money activity on the chart, so you can see whether they're buying, selling, or not participating. This means you can even the odds because you're trading in harmony with the smart money. We offer access to that methodology in 3 ways. A complete educational package which includes powerful software tools to develop you into a smart trader. We host live trading rooms. And we offer a trade alert service for people who want to start trading now. Whichever way you decide to access VSA, we will show you how you can identify the tops and bottoms of a market in foresight, not hindsight. How to use the 3-stage trading process: scan, confirm, trade, to form the basis of a powerful trading strategy. We will show you techniques that will help you manage risk and optimize your trading. We'll show you why the media is key and how to trade the news and the volatility often caused by it.
Before, I was a mediocre trader and a losing trader. With this, I finally turned around and became a successful trader.
As a customer, you'll learn things which will enlighten you as to how the markets really work. You'll discover knowledge that only a small fraction of the trading community know and understand. So welcome to the smart trading community.